Hi there. In today's video, we are going to study IAS 20 government grant. Definition of government grant is aid from the government in return the fulfilling the compliance which set out the condition if condition is met. In simple words, we can understand government grant is financial help, cash or other benefits given by the government to a company if company meets a specific condition. Example, suppose a government wants to encourage companies to set up factories in rural area. The government gives 100,000 to manufacturing company to build factory in rural area. The company must operate factory for at least 5 years to keep the grant. So this is the condition we need to fulfill it to get that $100,000 government grant. Okay, here 100,000 received from the government is government grant, and the condition is operating the factory for 5 years. So here, as the definition said, aid from the government in return fulfilling the compliance which set out the condition if condition is met. This is the simple definition. We can understand this definition by these simple words and example. Now here, assistance from government which is not monetary, for example, training provided by government for the employee. This is not recorded in the financial statement. Whatever assistance we receive from the government in form of any kind of training or any kind of skills upgrade program, these are assistance because it is not monetary. We cannot recognize this as a government grant. Instead, we can call it as a government assistance. Now, there are two types of grants. First one is revenue grant, second one is cost grant. Definition of revenue grant is monetary aid given towards expense being incurred to earn the revenue. For example, government said that if you are going to open factory in the rural area, then government will pay the certain percentage of the employee salary. So here we are going to open manufacturing setup it with the motive to earn the revenue, and government is paying employee salary, certain percentage of employee salary. So the expense we are incurring on the employee salary and we are receiving the monetary aid on the employee salary, that called as a government grant. Okay, now that capital grant. Definition, monetary aid given towards purchase. Example, purchase of machinery. Suppose that government said that if company will purchase semiconductor machinery, then government will pay the 30% of the machinery cost. So here the 30% of the machinery cost come under capital grant. Now, sometimes we need to repay the grant. Okay, so partial repayment and full repayment. There are two types of repayment. First, we need to show that here full repayment and partial repayment. This is that treatment. First, we need to understand this. What is two ways grant for the asset can be shown. First is deferred income method. Second one is net presentation method. Under deferred income method, asset recorded at full cost, grant recorded as a liability, deferred income, and recognized in profit and loss over time, matching depreciation expense period or expense period. We can understand this by looking at this example. We will see this later. Now, second one is net presentation method, deduct from the asset. Asset recorded at net of grant means cost of entire asset minus grant amount we receive. Now, example, we can understand this. Record the grant separately as a liability, deferred income. On purchase, general entry will be DR asset machinery. For example, we can understand machinery cost is $50,000 and CR bank amount CR bank 40,000 and CR deferred income. This deferred income for 10,000 is our grant amount which we receive. Okay, so the general entry will be this. On the purchase of asset, DR asset machinery cost 50,000, CR bank 40,000, deferred income 10,000. Yearly entry. Now, the annually 5 years life we have on of that asset, and depreciation method we are using a straight line depreciation. Okay, so depreciation expense will be 50,000 divided by 5 because total we have 5 years. So each year depreciation expense will be 10,000 and CR accumulated depreciation. This will be the general entry. 10,000 depreciation amount and CR accumulated depreciation amount 10,000. Now that deferred income we need to discharge it to the P&L each year. How we will discharge it? First, we need to calculate the deferred income annual amount. So the total consideration we receive on the asset from the government side, that is government grant, that is 10,000, and 5 years we have straight line depreciation asset life. So 10,000 divided by 5, this will be 2,000 per year. We have deferred income that will go to PNL each year. So the general entry will be DR deferred income 2,000 and CR grant income 2,000. That will go to PNL. Now we can understand this by looking at same example. So the asset cost is 50,000, grant is 10,000, asset life is 5 year, 3 years is used and 2 years is left. And now we are in the beginning of fourth year. So 2 years we have left. Remaining deferred income we have 4,000 if using deferred income method. Okay. So now first, what is deferred income method with the help of this entire general entries. So the asset shown at full cost, grant shown as a liability. So the asset will be shown as full cost and grant will be shown as liability. Partial repayment, 3,000 we are repaying. So there are two types of repayment. First is partial repayment, second is full repayment. First we are seeing that partial repayment under deferred income method. So the general entry will be deferred income 3,000 CR bank account because we are paying cash to that repayment for the repayment. So no PNL impact in this scenario. And because we have 4,000 deferred income remaining, and from the 4,000 we are paying 3,000. Now full payment. So the full payment what we have deferred income left is 4,000 and the rest 6,000 is already in PNL. So the here 4,000 we have in the deferred income under partial payment. We just paid 3,000 from the deferred income because we already have a deferred income 4,000 left. And so we have 4,000 deferred income left and 6,000 already in PNL because we have already discharged in the PNL. Now that under the full payment, general entry will be that DR deferred income 4,000. First, we need to use entire deferred income, and second, DR loss on the grant repayment 6,000 we are because we are paying. So the general entry will be that DR loss on the grant of repayment. That is 6,000 amount and CR bank account 10,000 because total amount we are paying from our bank is 10,000. So the 6,000 loss in current PNL. So here we have PNL impact. But under the partial repayment method, we do not have any impact on PNL because we have already 4,000 left in the deferred income. So we directly paid. Now, net presentation method, grant deducted from the asset cost, a partial repayment 3,000. General entry will be that same we are doing the partial repayment of 3,000. So general entry will be that 3,000 asset amount. Here the amount will be deducted from the asset because that is net presentation method. Under the net presentation method, we are showing that net of the amount cost minus whatever grant we have received, net of cost. So that general entry will be DR asset 3,000, CR bank account 3,000. When we are doing DR asset 3,000, it means that carrying amount will increase. When carrying amount will increase, then future depreciation will increase because it has prospective effect. Example, 2 years life left and new depreciation will be 6,000, 16,000 we have remained and 3,000 will be added because here we paid that 3,000. So the new depreciation will be 16,000 plus 3,000 divided by 2. 2 years life we have remained, that is 9,500 per year. 16,000 how it's remained before because for we are doing net off. So the 50,000 we have that here we can see that 50,000 we have asset cost and grant amount is 10,000. So net off will be 40,000. Under the net presentation method, asset recorded net of the grant. Net of the grant cost minus grant amount. Depreciation is charged on the net carrying amount. So the net carrying amount will be 40,000. So for that reason, we are doing 16,000 plus 3,000 divided by 2, 9,500 per year depreciation. Now the full repayment under the net presentation method, we are doing full repayment of $10,000 grant amount. So same we have general entry DR asset amount 10,000 and CR bank account 10,000. So the new carrying amount will be 26,000 because already we have 16,000 in the carrying amount and 10,000 we are paying the repayment of grant. We have 10,000 increase here and now the new depreciation will charge on 26,000. So 26,000 2 years we have life left. So 26,000 divided by 2, 13,000 per year we have depreciation amount. no immediate loss effect through higher future depreciation. So we have effect here through higher depreciation expense, but under the deferred income method, we have effect current on the P&L with this 6,000 direct impact. Here the impact will be through the depreciation. Uh, Now, if grant was shown separately, adjust deferred income. If grant reduced asset cost, increase asset value. Repayment means returning part or all of the grant due to not meeting condition. Okay, so whenever we have not met the condition, we need to repay the grant amount. Okay, now the disclosure. What we need to disclose here: the accounting policy and presentation method adopted. What accounting policies and presentation method we have adopted, such as deferred income method or net presentation method. Second disclosure is nature of government grant recognized in a financial statement. Which nature of government grant we have recognized, whether it is capital grant or revenue grant. Now, third one is unfulfilled condition relating to government grant that have been recognized. We also need to disclose it. Thank you for this video. In next video, we will study different topic.